you are the woman that has sued the Fed and you won't back off.
I sent a warning to the Fed about this very issue because I think the SEC created a risk issue in financial markets that is potentially big enough to cause a problem at the largest banks in the United States. We're talking billions of dollars a day of hairstop risk.
Hello, I'm your host, Effie Pilarinu, and today I'm delighted to have as a guest a fierce woman, Caitlin Long. Welcome, Caitlin. Thank you.
Effie, it's an honor. Thank you for asking me to be on. You and I have just almost touched circles so many times, and here we finally did it, and I'm glad to be able to do it.
I'm glad too. For the audience, let me say a couple of things briefly about you. You are the CEO and founder of Custodia Bank, and we'll have the opportunity to talk about the mission and the role in the ecosystem. You are, I would say, a financial veteran. So we both started at Salmon Brothers. You know, what an extreme a corporate culture and where we
Yes.
are today, what we're representing, right? Openness, decentralization, and so on. And you have been also very instrumental, I would say, in the progressive regulation in your state in Wyoming regarding blockchain, digital assets, and even DAOs, from what I understand. You have a legal background, and you are the woman that has sued the Fed. So let's, and you won't back off. That's the other thing, right?
Nope.
Why don't we start from there? What is the lawsuit all about, and where are you at? Where is Custodia Bank at?
Well, maybe because you have an international audience, you and I both obviously also spent time in Switzerland, something else we have in common. But for those who are not American, it's confusing the way the US banking system works. We have something called a dual banking system where banks can be chartered federally or by the states. And Custodia is a state chartered bank. In the United States history, only the states chartered banks until the US Civil War. In the 1860s, the National Bank Act was enacted to create this parallel federal charter, but all the federal and state banks have the same powers by design. These are equal systems that exist in parallel. So what has happened is that the Fed engineered, contrary to federal law, an ability to veto disfavored state chartered banks. They have never had that authority. Congress never granted them that authority. And that is what the lawsuit is about. So I know you do a lot in fintech beyond just crypto. The entire fintech industry in the United States is watching this as well, because, for example, in the UK, there is something called an e-money license where fintechs don't have to become full-fledged banks, but they are eligible for clearing accounts at the Bank of England. In the US, you have to be a depository institution, a very particular type of bank. And those are the only institutions that are eligible for a clearing account at the Fed. And so a lot of fintechs are watching Custodia. We are a full-fledged depository institution, but the entire lawsuit turns on, well, there are multiple lawsuits turning on this. It turns on whether the Fed has discretion to deny state chartered banks it doesn't like. They have invented authority for themselves in the past few years. It goes well beyond crypto. It started with a bank that wanted to bank the cannabis industry in Colorado. There was a pretty famous case called the Narrow Bank, TNB, in Connecticut. And now there are multiple lawsuits in flight with state chartered institutions beyond just Custodia.
And as you said, Caitlin, this issue in the US for fintechs in general, having or not having access to a Fed master account obviously is a very big issue. And by the way, it's not only in the UK, also in Europe, there's these EMI licenses that
Right.
have, resulted in a booming fintech sector and have facilitated open banking and embedded banking. So the issue is that Custodia Bank doesn't have access to a a Fed master account. And from what I understand, although I'm not so knowledgeable about what happens operationally to settle Bitcoin to dollar trades, but I understand that the problem is that you have Bitcoin trading 24/7, but there is no way to settle Bitcoin dollar trades after the market. And
Right.
this is really bizarre because we have that in
Yes.
the foreign exchange market, and
Yes.
there are systems that are designed for that infrastructure, if you want, that are called the CLS system, correct?
Yes. Correct. And I'm glad you brought that up because what you're hitting on is what finance experts will recognize is a form of Herstatt risk. The Herstatt failure was a failure in the foreign exchange market of a German bank that triggered, when it failed, cascading defaults. And we have Herstatt risk in Bitcoin trading markets and in crypto trading markets generally, precisely because of what you just laid out. Bitcoin and Ethereum and other cryptos trade 24/7, 365. The vast majority of transactions in our markets still settle in US dollars. But what happens is that unless the transactions are settled in a US dollar stablecoin, they have to wait until Fedwire hours. We need a CLS bank for Bitcoin to US dollars. And this has become an acute issue in the ETF market in the United States because the SEC only approved cash creates, which means that you cannot create a unit of the ETF with Bitcoin itself. If you could do that, then the US dollar settlement issue would be abstracted away. But the SEC hates the entire digital asset industry with a passion and is trying to throw so much sand in the wheels. And I will disclose, I've only talked about this once, but I'll share it here. I sent a warning to the Fed about this very issue because I think the SEC created a risk issue in financial markets that is potentially big enough to cause a problem at the largest banks in the United States. We're talking billions of dollars a day of Herstatt risk. That's meaningful enough that if there are cascading defaults among the counterparties in the Bitcoin trading markets, it could hit one of the global systemically important banks. And they have created this problem themselves because of the cash create limitations on Bitcoin ETFs in the US, and also because the tool that the market evolved to solve this problem, really, there have been two tools that the market evolved to solve this problem, and the US bank regulators have been moving to shut them both down. What I'm referring to is the use of US dollar stablecoins, which US banks are not permitted to touch.
Right.
And the second is the 24/7, 365 US dollar settlement networks, Signet and Silvergate's, what was that called? Signet was signatures and Silvergate had SEN, the Silvergate Exchange Network. And both of those banks were shut down, and they definitely had bank runs. For what it's worth, I warned the Fed that those two banks were at risk of bank runs months before the bank runs happened because of this exact issue. And when the Fed came in and shut those banks down and the FDIC, they specifically shut down the 24/7, 365 settlement networks. That was the risk management tool that this market was using to prevent a contagion into TradFi. And now, because of the way the SEC approved the ETFs, that contagion is not only potentially in TradFi, it's right at the center of the financial system in the global systemically important banks. This makes no sense from a risk perspective. But the regulators did this themselves. And if there are problems, they will own those problems.
Caitlin, explain to our audience why SWIFT can't solve this problem, because most would think, okay, I mean, we have SWIFT or seven. How come we can't use SWIFT? Why is this different?
Well, first of all, SWIFT, anyone who's used SWIFT, who's actually used it, knows about the proverbial SWIFT black hole. And this is a joke. I used to work with corporate treasurers at the end of my Wall Street career at Morgan Stanley. They used to joke about this. The money goes into the SWIFT black hole, and you just have to pray that it comes out. And Lord help you if it gets lost along the way. I'm thinking about a transaction that was a swap settlement where the money had to go from the US to Mexico to the Netherlands same day. And guess what? It didn't get there. And the treasurer of the Dutch company had a sleepless night. It turned out that the money got credited to the Dutch bank. It just didn't get credited to the right account. But that treasurer could have lost his job. This is the sort of thing that corporate treasurers have to deal with. So the SWIFT black hole is, you cannot trace transactions. Now, I know that's gotten better, but you cannot program them to settle at a particular time. And let me remind everyone, the Bitcoin trading markets, Bitcoin settles every 10 minutes. With SWIFT going overseas, you're touching at least 6 different financial institutions, which means you're hitting 6 different data centers with the exact same data, duplicating it and reconciling it. But it all has to be done in sequence. And this is one of the biggest reasons why you can't get real-time gross settlement of a US dollar against other traditional currencies, fiat currencies. And that is a huge problem with the rise of trading in cryptocurrencies. It's really funny how stablecoins, US dollar stablecoins, came about. It was because of the federal bank regulators trying to kill the crypto industry by killing its US dollar access. And necessity became the mother of invention. And the first stablecoin was Tether, and it was created in order to solve this very problem. Dollars can transact offshore. They're called euro dollars. They don't have to actually settle, and they can just transact again and again and again and again and again. And here's the great irony. If the US had really wanted to kneecap the industry, the last thing they should have done was stop the US dollar settlement exposure, because that's what created the stablecoin invention. And so they shot themselves in the foot. It's all upside down.
It's all upside down. And that's why, some believe that the US dollar stablecoin market will grow like the euro dollar market.
Yes.
We'll see what happens there. Caitlin, you mentioned narrow banks and narrow banking. Yes. And actually recently here in Switzerland, there is a startup that is looking to launch a narrow bank. I'd like to hear your thoughts. Is Custodia a narrow bank? Do you see narrow banking rising, in Europe, maybe because of favorable regulation? And what is this business model? What is the need for narrow banking?
Well, it depends on what you mean by narrow bank. I do not think Custodia is a narrow bank because we have a diversified business model. But traditionally, a lot of folks would refer to a narrow bank as a bank that doesn't lend and makes its money on fees. What I just described to you, a financial institution that doesn't lend and makes its money on fees, describes every payment fintech that exists. They have that exact business model. Yeah. So it's interesting that the banking regulators have such trouble getting their arms around how a bank that doesn't lend can make money, when fintechs prove every day that they can do it. It's just that, especially in the US, where there's this very strict dichotomy between a bank and a fintech, even more so than in Europe, the US banking regulators just can't fathom that a bank can exist without lending. But they do every day, and they do it successfully. And if you step back and think about what we just talked about with the Herstatt risk, this was a great introduction to this next topic. You want to try to settle real-time gross. That's what CLS Bank is. It's a continuous linked settlement so that you can free up unsettled transactions, and you speed up settlement cycles to free up the balance sheet and make sure there are not cascading defaults like happened in the Herstatt situation. That's the need for trying to reduce the exposure of counterparties to unsettled transactions. Well, we talked earlier about Bitcoin settling every 10 minutes. The US dollar settles, if you are onshore in the US, you can do it with Fedwire, same day, but you can't program it to settle at a particular minute of the day. So you're going to have some settlement exposure, some settlement mismatch even intraday, right? And if, Lord help you, if you're going overseas to using Swift, it's what we just talked about. So you're going to have settlement mismatch. So what we need is something that solves that settlement mismatch. Now, it's interesting because George Selgin, who is a well-known academic who's defending free banking, fractional reserve banking, and he's done a lot of work on this narrow banking concept. He and I agree that because crypto settles so fast, the concept of fractional reserve banking, when something settles so fast, right? The trades are happening at the speed of light and they're settling within minutes. Ethereum is around 3 minutes. Bitcoin is around 10 minutes. These are fast, far faster than any of the traditional settlement of fiat currencies. The concept of fractional reserve banking is inconsistent with something that settles that fast. That's the aha. And so ultimately, I think George and I will end up agreeing. We respectfully disagree on certain things, but we will end up agreeing as, to use Lynn Alden's way of putting this, she's an engineer by training and she thinks in engineering terms. So I love the way she says this. We have had to abstract away the settlement mismatch of money ever since the transcontinental communication lines got laid in the late 1800s, because we could send the data leg of a transaction, a financial transaction, at the speed of light, but the money leg settled at the speed of matter. So that mismatch between the speed of light and the speed of matter is actually, if you think about it, it underpins everything in finance, because historically money was gold and it had to move at the speed of matter.
Yeah.
Right. And now money is abstracted away in fiat. It could settle at the speed of light, but because we've got all this infrastructure that we've carried for decades, you'd have to tear all that infrastructure down in order to get the abstracted fiat to settle at the same speed of light as the information leg of your trade. But here's the aha. And this is why Lynn, as an engineer, became so interested in Bitcoin. For the first time in human history, the information leg and the money leg of a financial transaction can settle simultaneously.
Yeah,
Aha.
because it's not an accounting entry that is moving. It's really
Bingo.
the actual asset, whether it's Bitcoin, doesn't matter. It's the actual value that is moving and settling, and not this accounting ledger. And this is that people don't understand, because they're like,
right,
hey, we're digital already. What is
just
this?
abstract it away?
Yeah.
But you can't, right? And as you were describing this so aptly, stablecoins don't actually settle at the speed of light because they're fiat currency, which is not issued natively digitally.
Yeah.
If you issued the US dollar natively digitally, which of course a number of central banks are experimenting with central bank digital currencies where they would be natively digital. If you're issuing the money natively digitally, then the information leg and the money leg can settle at the same time. But here's the thing, there's still an issuer of a fiat currency.
Yes.
With Bitcoin, there's no issuer. And so you're actually taking, you don't have to abstract away that layer of the issuer. The money is the settlement. The trade is the settlement. The information is the settlement. It's all the same thing. And that is profound when you stop and think about all this infrastructure that has been built up over the years to deal with the abstraction away of that time difference between information moving at the speed of light and the fiat leg settling at the speed of matter.
This is, and when I think of all the collateral management issues that are so important, you know, on what I think of wholesale banking, you know, at the institutional level, just amazing. I mean, I hope that before you and I retire, we see on-chain issuance of US treasuries. That would be something.
Yes, well, we're one step away from that because of the tokenization of U.S. Treasuries.
Yeah.
But again, you've got to be able to natively digitally issue them. And I will say, I am so excited about what my native state of Wyoming is doing, because one of the things that stands in the way of natively digitally issuing securities is that the corporate registrations are still done in analog form, not natively digital form. So you have to get the secretaries of state in the US states, which is where corporate registrations are done. I'm sure there's a registrar in Switzerland that's the equivalent. That has to be done natively digitally. And one of the things that I did right after I left Wall Street, I worked for a startup that was trying to do this tokenization. And it worked with the state of Delaware, with the Delaware Secretary of State's office. And it turns out the registered agents in Delaware really hated what we were doing because we were going to automate their job with software, and they just, tried to kill us. And so I'm used to this whole question of, incumbents trying to stop progress by using regulatory capture to do so. I lived it, and they succeeded in Delaware. But it's going to happen in Wyoming. And I think we're pretty close to having Wyoming natively digitally issuing your corporate registrations. So instead of actually having to abstract away, which has caused a lot of ledger inaccuracies in the securities market, the whole question of whether the shares that you're buying are actually duly issued and outstanding shares, you could do that with an API call. By the way, we don't even need a blockchain for this. You just have to natively digitally issue. And once you natively digitally issue, software can just make an API call back to the Secretary of State that says, yes, this is a validly registered share. And then you wouldn't have these problems with the collateral posting that you just referred to. There's a famous case in the US from 2017, not that long ago, for Dole Food, where the company was acquired and Wall Street's ledger systems created 1/3 more shares of Dole Food than were duly authorized at the Secretary of State in Delaware. So that goes to show you how, as you point out, all these ledgers that abstract that settlement difference to try to paper over it, so to speak, they can get out of sync with each other. And it's completely foreseeable if you understand how the technology works. Again, so much, we started in Wall Street in the so-called front office. So much of what was in the back office of Wall Street was abstracted away to us. There were huge armies of paper, pushers who were settling transactions in, Tampa, Florida, for example, for Solomon Brothers. I never went there, right? You originate transactions and then they just kind of go into this black hole akin to the Swift black hole. And then there's somebody in operations, if something gets screwed up, who has to go trace it and figure it out. All that can be abstracted away with technology. And I went with the Deputy Secretary of State of Delaware to the SEC, and he shared with an SEC commissioner an example of a proxy contest where they discovered in a proxy fight that there were more shares listed as issued on the 10K of the SEC filing than were validly registered at the corporate registrar in Delaware. So those kinds of mistakes, some of that's nefarious, some of it's not, but it's so easy to see how the back office has all these problems. We can streamline all of this with technology, but you've got to be able to get natively digital with the issuer. So back to your question about treasuries being tokenized, right now they're not natively digital, right. But we're about to get corporate securities natively digital in Wyoming. I think that could be as early as next July, a year from now, in Wyoming. And I think that's going to be a game changer, because then you can really build technology to improve the ledger accuracy, which is ultimately fairer for everyone. And some of the nefarious things that do happen will end up being those avenues for arbitrage that are not fair will end up being closed. And that's a wonderful thing for fairness.
So is this type of business helping, for example, treasurers of corporates, non-financial corporates, manage their treasury? Is this part of services that Custodia Bank could offer, or tokenization, infrastructure for tokenization? What are the kinds of services beyond the custody fees that we all understand.
Yes, well, that was the original proposal that Custodia made to the Fed, which may be part of the reason why the incumbents wanted to kill it so much, because we actually proposed to be a bank-issued stablecoin. Custodia has the patent that was granted in the summer of 2022 on taking in a US dollar deposit to a bank. Again, that's a very specific thing in the US, and issuing a tokenized deposit in the form of a digital cashier's check. And that digital cashier's check can then transact on blockchains. And to say that the Fed hated that was an understatement. But when you look at the history of what happened to Custodia, the real issue wasn't that. We had a lot of supporters inside the Fed, a lot of people who really appreciated how careful both the state of Wyoming was with its regulatory regime, which incidentally is very much aligned with the Swiss digital asset regulatory regime, and Bermuda. So Switzerland and Bermuda beat Wyoming to it, but Wyoming was very early to start to adopt this in 2018 to create legal definitions of, what is a digital asset, right? And a lot of what Wyoming did is based on the trailblazing work of Switzerland. But the point is that there were a lot of folks inside the Fed who really appreciated both what the state of Wyoming was doing and what Custodia was doing. And here's what happened. 2 weeks after FTX failed, the vice chair of the Federal Reserve had a meeting about Custodia, and then days later, the first draft of the denial letter appeared. So the Fed overreacted to FTX. That's what happened to us. But we were playing ball with the Fed, and very much, I can say there's enough public information about this that a lot of what is happening here is political in the United States. There is a big movement of the far left part of the Democratic Party, led by Senator Elizabeth Warren and staff inside the Biden administration, that she got veto over on the political appointees in finance and economics in the Biden administration. So they all owe their jobs to her, and they're towing her party line, so to speak. But it's been fun to watch the other parts. That's just one faction. There are other factions, including moderate Democrats, who have come forward. I've talked multiple times about that Washington, D.C. is a sieve, and confirmed that we've had insiders come forward to talk to us about what happened to us. And those were moderate Democrats in most cases who were not in agreement with the extreme policy of the Biden-Warren administration to try to kill all things digital assets in the United States. So now we're at an interesting inflection coming up, because this topic has entered the vernacular for the presidential campaign in the United States. And there are 3 candidates that will be on most states' ballots, and 2 of them are very pro-digital assets, and one of them wants to kill the industry. And so you've really seen the industry, by the way, especially kill the law-abiding parts of the industry, like Custodia. We were the ones. Coinbase got it in the securities side. Custodia got it on the banking side, especially awfully. They really targeted the law-abiding citizens to try to scare everybody else. It's in Wyoming, we say, shoot the stallion to scatter the herd, as I've got stallions on the art on the wall behind me. I'm in Wyoming. But that's what happened. And the rest of the world is moving far ahead of the United States, unfortunately. But there's a big inflection point coming. If Biden is reelected, then I think most of the digital asset industry will finally, in the United States, just have to leave the United States. But if he is not reelected, if either of the other 2 candidates is elected, then I think the environment might change really dramatically.
Interesting. Caitlin, we could talk a lot more, and I want to wrap up on 2 notes. One is you're definitely a role model to the whole sector for many reasons. And of course, to women entrepreneurs, which are few and more so in the crypto industry. But I consider this the fintech industry. There's no difference anymore. And I encourage also crypto natives to think like that. It's really innovation in financial services at the infrastructure level. It's not about, we could say it's also about the user experience, of course, but not in the sense that we have traditionally thought of it in fintech in the sense of convenience, you swipe. We're not there yet, but really
Right.
a truly genuine sense of secure, transparent, auditable, and also solving all this correspondent banking problems and many other transparency issues. I want to ask you a more personal question before we close. How do you deal with all these adversities, with all this evolving space, with the uncertainty, even with these changing narratives in the crypto industry? What is your secret? Do you run? Do you fly? Do you sing? What do you do?
Oh gosh. Well, it's so interesting that you ask that because you and I both started our Wall Street careers in a rough and tumble place, Solomon Brothers, in the early 1990s. And here we are 30 years later. But that helped mold us and it helped toughen me up. Absolutely, it did. And, anyone who survived and broke through in that environment can pretty much take anything. The other piece that I would lay out is I've just been a change agent my whole career. This is my 5th startup. I started 3 different businesses inside Wall Street firms, worked directly for the co-CEOs of Credit Suisse in Zurich for a year on restructuring the insurance company, Winterthur Group, in Switzerland when Credit Suisse owned it back in 2001, 2002. So I've done a lot of different things, but that's the point. And so I had a very non-traditional career for that reason, because I tend to get restless. And so when you are a change agent and this is what you do, you just have to work the problem. And no change is ever straight line. And none of the businesses that I've started or helped co-start were straight line innovations. You always had to pivot. And so to me, it's just normal. I lament, and I've said this publicly many times, I lament that we ended up in a fight with the Fed. I know, again, several of the people at the Fed really appreciated hearing the warnings that I was giving about the bank runs that ultimately transpired. I was working, with law enforcement back the summer before FTX failed. This time, 2 years ago, I was arranging to have evidence of probable crimes at FTX delivered to the FBI. And then I did that under seal, but came forward after FTX failed and said, I'm the one who got you that evidence and I can get you more. And then we engaged. But that's the point, right? You work the problem. And when you see things that just hit you as wrong, you work with law enforcement and you speak up. And that's what I've been doing. So yes, I think a lot of folks probably would have thrown in the towel by now. To me, it's just a challenge. And we're prepared to take that lawsuit all the way. And I'm very much still hoping and have left the doors open for a friendly relationship with the Fed going forward. And I know many of the folks internally at the Fed would appreciate that. So hopefully we'll end up there. Who knows how long it will take, though.
Persistence. You do what you think is the right thing to do. That is what vision and integrity is.
Indeed, we're doing the best we can. We're recording this on the day that the appeal brief in our lawsuit is due. I hired a really great legal team, including a very strong female attorney who has been highly decorated and has an incredible win record in her own right on appeals. And so you may want to put that in the show notes, because the document, by the time this show comes out, will probably be publicly available. So keep watching us, as everyone in not just the crypto industry in the United States is doing, but also the fintech industry, because this definitely has broader implications, as we talked about earlier.
Thank you so much, Caitlin, for being with us today.
Thank you, Effie. Nice to do this. I'm so glad to connect with you, especially given that you and I have these, we almost cross paths so many times in our careers. And now here we are together today.
More. We're not retiring, right?
We're not done. No,
We're not
heavens, done. No. Absolutely. And let's keep having fun.